Well, good afternoon, and it's an absolute delight to be here today. Thank you very much to eDaily for the invitation to speak. And I can only echo many of the comments that Chris already made earlier on the panel. Europe is really the place to pay attention to. We've got some experience about it, really. We've been investing in early stage technology in Europe for more than 30 years. My name is Pierre Socha. I'm a partner with Amadeus Capital. And I want to share with you our perspective on Europe and its tech ecosystem and why we see it as one of the best places in the world for Korean LPs to diversify, but also for Korean companies to expand as they look to grow their market internationally. So, sorry. How do we go to the next? Sorry. Thank you. You've been there. Exactly. So for context, we've been investing for, as I said, nearly 3 decades, primarily in science and technology, or in deep tech, as we call it today in the market. So think of it as spaces like AI, semiconductor, biotechnology, defense application as well as becoming more and more important, and computing altogether, from quantum to brand new architecture. We've deployed 1.3 billion over the years in more than 200 companies, and we've had our fair share of exits as well. And one of the particularities of Amadeus Capital is that most of us are former entrepreneurs, former operators in tech companies. We've started companies, we've built them, and we exited them as well. And there's probably no better example of that than my partner and co-founder for Amadeus Capital, which is Hermann Hauser, which was also the co-founder of ARM, the semiconductor company based in Cambridge. And Amadeus has a vision, an ambition, and we've been carrying that for some time now, which is to invest in what we call technologies of consequence, and in the entrepreneurs, the bold entrepreneurs really, which are behind each of them. And very often we end up with product that all of us here in the room take for granted, that are ubiquitous, that we use or benefit from on a daily basis. Think of voice technology. We are all used to interacting with our device, with AI assistants today. This journey started more than 20 years ago with a company that we invested in and eventually sold to Microsoft called Anthropic. That became the backbone of Microsoft's research on voice. Back in '99. We repeated the feat a few years back with Vocal IQ, which was an exit to Apple, which ended up becoming the base for Apple's research in voice in the UK as well. And it completely transformed the performance of Siri, that again, we use it all the time. You don't see it, but this is happening, under the surface. Another example would be Bluetooth. We take it for granted that we can connect devices wirelessly today. This is thanks to a company called CSR, which started in Cambridge, which ended up being listing and is now part of Qualcomm. And they consumerized essentially a Bluetooth, which was a technology invented before in the Nordics. If you go closer to life science, as another example of some of the verticals we invest in, DNA technology is something that is used every day in every lab in the world. Many of you may have had your own genome sequenced or gene panels checked for specific conditions, or you've just been curious about where you come from and what your ancestry is. There's one company in the world that controls 80% of DNA sequencing by volume, and this is Illumina. It's a US-based company, and the technology under the bonnet, essentially, at Illumina comes from a company called Solexa that we were very lucky to back in the early days and eventually sold to Illumina in 2004. And, all of these examples, and there are countless, frankly, in the portfolio. We're very privileged to have been able to associate ourselves with these entrepreneurs. But all of them have, I would say, 2 key points. The first one is they impact everybody in this room, one way or the other. You're using the technologies every day. And the second is that all of them, although owned today by US companies, and that's an interesting dynamic that I'm sure we'll touch on, started out of European labs. And this is really fundamental. And it reminds you that Europe is a power when it comes to R&D. It's been very shy in marketing itself, and maybe that's something that will change given the macros today. But there is tremendous research being done in the labs. And Europe is what we are here to talk about today, starting with performance. Chris touched on some of the data points. It is becoming very clear for investors and for LPs that European performance is really one to watch. The Cambridge Associate data that was mentioned earlier is actually here for you to look at. Very regularly, Cambridge Associates will look at the pool of all their GP data and create essentially net return index comparing the US LPs, GPs with European ones. And what comes out of this data, if you look at the last two bars in each year, is that the European index at least match the US one. And over the last 5, 10, and 3 years, Europe actually outperformed the US in terms of venture return. Again, this is something we don't talk about, but the numbers speak for themselves. And as a result, it is the region of the world, one of the regions of the world that attracted the most, or that's seen the biggest growth in capital being invested in the ground, with the growth, a CAGR growth of 13% over the last 10 years. This macro performance is really fueling GP and LP confidence. And last year alone, investment in startups in Europe reached $45 billion. We did see quite a peak at $100 billion in 21. It corrected in 22. And then the question for everyone is this going to be a crash or a steep correction in 22, 23? And it ended up being essentially a realignment. And today, the VC ecosystem is very much stabilizing in Europe after 2 outlier years. And the question is, where does this performance really comes from? Well, we've seen the movie before. If you look at what's behind the success of the US ecosystem, you essentially have 3 pillars. You've got talent, you've got capital, you've got ambitions who are coming together. And this is the same in Europe. Over the last 20 years, all 3 pillars have strengthened significantly, especially in key countries that have really jumped out, the UK, Germany, and France. Over the last 10 years, they've raised $250 billion in capital in these markets. The UK is $150 billion on its own. And in many ways, the ambition criteria can be reflected or illustrated by the sheer number of unicorns that have come out of the ground in Europe over the periods. Chris mentioned 400, and it's probably the number where we are today. This is N24 data. It continues to grow, and the talent pool has increased significantly. It's jumped 7 times over the last 10 years. We now have 3.5 million technology workers on the ground in Europe. Altogether, the region is home to also 3,500 growth companies, 10 times more startups, and it's essentially at least quadrupled in many ways over the 10-year period. And there's no surprise here. Europeans are entrepreneurs at heart. They don't lack hunger. And I think more importantly for us and for me, given the investment spaces we invest in, they don't shy away of going after harder problems. And this is reflected very much in the way the money is being invested in the ground and the sectors that it goes into. And you can see a significant shift over 10 years between 2015, where most of the money, or a lot of it really, was going towards consumer, social, retail applications. Today, the vast majority is going towards technology. So deep tech on their own, as I mentioned, AI, compute, defense, and the likes attract nearly 20% of all capital. Sustainability, energy efficiency is a close second. Fintech, enterprise software, infrastructure continue to be key pillars of the tech ecosystem in Europe. And altogether, these layers of technologies have captured no less than 2/3 of all the money invested last year alone. And this is not a surprise for us. We've seen the movie, we've seen the evolution over the last few decades now. And there are 2 reasons. One is that investors don't shy away from investing in technology anymore. And this is great news for us. You know, it was a very lonely place 30 years ago to invest in deep tech. It's a buoyant ecosystem today. There are plenty of new technology investors, more and more CVCs as well, looking into the space. So building syndicate for the best companies has become extremely efficient as a process. And Europe also boasts a combination of academic and industrial research excellence. And as mentioned earlier, countless success stories. You know, we had ARM back in the days, for instance, and more recently DeepMind, or, you know, the Revoluts and the Wise and the many other exits that have taken place in recent years. Oops, sorry. How do I go back to? Thank you. So, interestingly, entrepreneurship has, you know, really become a preferred part now for many people in Europe. And this is something to be celebrated. It's also a very significant shift in mindset in a region where, frankly, until not so long ago, failure was frowned upon. And this is now accepted. It's almost a badge of honor. And as a result, and it can be surprising to some, every year Europe is seeing more and more entrepreneurs coming out, and essentially, you know, more entrepreneurs than the US is generated, which is unbelievable data. And this has been the case for the last 10 years at least. And founders came in different shapes and form. It's all over the place. But we as investors spend time focusing on two very specific subcategories or subgroup. The first one is entrepreneurs. Could you move it to the? There you go, sorry. That spin out from the success stories we mentioned earlier, because essentially they have an unfair head start on the journey. They come in with the knowledge, they come in with the experience, they come in with a network that they have absorbed by working with best-in-class teams. And this, if you look at it from an investing standpoint, also means faster fundraising cycles, larger rounds, stronger early traction, and more quantifiable results in terms of exits. And this group has grown exponentially in Europe over the years. We now have more than 9,000 new founders that came out from this billion-dollar company. This is expected to double again in the next 5 years. And it's no surprise, the US has had its PayPal mafia as an example. It's the very similar cycles that are taking place now in Europe, with unicorn spinning out unicorn, spinning out unicorn. At the other end of the spectrum, we spend a lot of time, and when I say we, I mean Amadeus. You'll have a range of investment strategies in Europe. We spend a lot of time in research labs, deep in there. Because as much as we like breeding unicorns, most of the technology startups and first-time founders will come out of Europe's best universities. And God knows there are plenty. And in the UK, in Europe, the UK in particular stands out. It hosts 6 out of the top 10 universities in the continents or in the regions. And even then, some will stand head and shoulders above the rest. The University of Cambridge on its own, for instance, is the top source of founders of European venture-backed companies. Now let's take a look at the GP and LP side of the equation. Europe's fundraising environment is really in a good place, in my opinions. We had a scary year last year when it really dropped, and we wondered how long this would last. 2024 corrected, and funds raised 25 billion, or an estimated 25 billion altogether. So it's really showing signs of recovery and positivity, but it's not all rosy. Europe has one macro challenge it really needs to tackle, and that is to unlock more capital to help companies grow in Europe and stay in Europe. And that's been a huge challenge over the years. It's estimated that 375 billion has been missing over the last decades for European companies to grow and stay here. And as a result, many of them ended up raising, usually in the US, very often relocating to the US, or putting the brakes and slowing down their own growth based on the capital available in Europe. As a result, we're seeing many fund strategies evolving. The proportion of funds that are larger than 250 million in size has grown tremendously over the last few years to capture this investment opportunity, to capture this delta essentially in return as well. And it's now, this group covers nearly 50% or a bit more of all the amounts raised in Europe, while it was just 30% a few years back. But there is one elephant in the room there. I think there's a key class of LPs which is still missing from the equation in Europe, and this is significant. And right now, all eyes are on the pension funds. They can definitely play a pivotal role. We've seen the impact they've had in the US, in the 70s when key legislation was passed to encourage pension funds to go into more essentially riskier assets, higher return, higher risk ones. And it completely changed the ecosystem there. It created generational firms like Sequoia, transformational companies like Genentech back in the 80s, and Europe really badly needs its ERISA moment. Now, there are countries moving forward. Sweden's always been very proactive. France is moving as well. The UK earlier this year has passed a legislation to consolidate many of its local pension funds and allow them to invest up to 10% in venture and private equity. And we very much hope that there will be more at the European level to tap into the growth potential there. Thank you very much. So, continue to be very bullish about Europe, and I look forward to the discussion.